So I've got as clear a view as I could possibly have. Nothing is a certainty, but for me, the macro is rolling over. By that, I mean we're going into recession. We should see the things like the ISM survey and other things start falling apart pretty quickly. The forward-looking elements are falling apart already. We're seeing it globally. So that's growth evaporating. Alongside that, the narrative hasn't caught up. Most commodities are down between 30 and 50%. Oil is the last to crack, and I've been talking about this on Twitter. I've been writing about it for a period of time. Is everyone's long and expecting oil to go to $200. I think there's a washout coming, and it goes down to 60. So that's the last inflation story. Everything else from the raw goods then comes into the supply chain and then eventually starts fading. So we're going to see that inventories, because people build massive inventories after COVID. Those inventories are now unsold because of the economy slowing down and inflation eating disposable income. So we've seen it from Walmart, Amazon, and others. They're going to start discounting inventories to try and shift it. People are laying off staff. So the macro cycle is going to get to the ugly phase.
Hello and welcome to Money Talks. In today's video, macro guru, crypto enthusiast, and Real Vision CEO Raoul updates about inflation, crypto markets, and recession fears. Raoul gives his macro thesis about financial markets, rising interest rates, and his thoughts on the Bitcoin versus Ethereum debate. Make sure to stick around to the end of the video where Raoul predicts why inflation will turn negative in the coming months. So without wasting any more time, let's dive right into the video.
Okay, why is that making Raoul bullish? Well, because the outcome to that is as inflation comes down and bond yields fall, liquidity conditions improve. And what drives financial markets at the macro level the most is liquidity conditions. We've just gone through the largest tightening in financial market history because the rate of change of interest rates going up was the fastest ever. Mortgages are back to where they were in 1996, and shocking. Then the dollar went up at a rapid clip, which is a tightening of financial conditions, and then commodity prices went up. So basically, everybody's suddenly skint, as an Englishman would say. Nobody's got any money, and the economy implodes. So the forward-looking indicators suggest to me that this goes off a cliff fast until we probably bottom Fed March next year. That's the economy. Now, forward-looking assets' job is to look forward. So one of the reasons crypto, digital assets, went down was because discretionary spending came out of the market. So if you think of the legions of dollar cost average retail investors and just think of their rent or mortgage payments went up, their shopping bills went up. So suddenly, or if they were foreigners, the dollar went up. So suddenly, how the hell can they buy as much dollar cost average in crypto? They don't. So they stop. So what happens is you've removed a huge amount of buying power. So as these conditions change, that changes. Also, the other big players in the space now, the hedge funds, the crypto, the macro funds, and then the institutions, well, they're also a function of liquidity. So when liquidity is more available and cheaper for them, they can apply more leverage essentially in their portfolios. So what we end up with was a position where the big thing that correlates to crypto markets overall is some definition of liquidity, and you can use M2, global M2 year on year. That looks pretty much like Bitcoin year on year or crypto market cap year on year.
The Bitcoin price performance has been on a roller coaster ride since the beginning of the year. Bitcoin investors are worried about Bitcoin's lackluster performance, even though all the other major cryptocurrencies like Ethereum, Polkadot, and Dogecoin are striving hard to recover their losses. Due to the recent spotlight on Ethereum and its upcoming merge upgrade, investors might be neglecting the importance and popularity of Bitcoin. However, analysts still believe that Bitcoin has the potential to reach US 100,000. They also indicate that Bitcoin investors should wait for an entire year to see the cryptocurrency gain immense heights and break its previous all-time highs.
We're at the very bottom. It usually turns around at this point because eventually the outcome is central banks have to provide liquidity in a recession because there's no liquidity. So forward-looking assets like crypto are picking it up. So they also have perfectly correlated to the turning points in the inflation cycle. So they kind of time the bottom, and I think it's time the top. So basically, I think crypto is saying, okay, inflation has now peaked, and therefore the marginal pressure from tight liquidity is gone. So my view is let's give it a probability, 70% probability. So that's pretty high conviction that the low is in. And therefore we're starting the upside cycle. So the macro, I think for me, even though everyone thinks, oh my God, it's terrible, the equities are going to sell off. Well, the equity side of the equation, that correlation with equities was actually a correlation to liquidity. They're all actually correlated to the macro cycle. Can equity sell off further? Yes. Can crypto decouple? Yes. We saw that in March 2020, that crypto started going up when equities were going down because crypto is more forward-looking. However, equities have actually priced in quite a lot already. So it's not 100% clear whether equities need to go down or not. So I did a Twitter poll recently with like 20,000 people responded, which was, do you think equity markets have further to fall? 70% of people thought so. And I said, are you underweight where you typically would be or in line? And 70% of people are underweight. Well, if 70% of people think the market's going to fall and 70% are underweight anyway, who's left to sell?
Sure. Yep.
So that's, and it was the same with crypto.
Based on previous reports on Bitcoin, the cheaper market value is facilitating institutional investors to hoard large amounts of Bitcoin tokens. These movements basically give hope to regular investors about the future prospects of Bitcoin token. While some believe Bitcoin is dead, there are others who say the cryptocurrency will rise again and continue to remain the most prominent cryptocurrency in the market. The uncertainty around the macroeconomic conditions is one of the major triggers causing the Bitcoin price to plummet. Nevertheless, Bitcoin's current movements can be termed as enduring trajectory, mainly because it is one of the best performing cryptocurrencies in the world and will probably be on track to record fresh gains by the end of 2022.
I know the narrative is incredibly strong, and I sound like a lunatic by saying, well, it's not going to be like that. I strongly believe with an aging population, massive debts, and a recession dead ahead, the ability to generate persistent inflation going forwards until the end of the next business cycle. There's always inflation at the end of a cycle. The end of the next business cycle, sure, inflation will be high again. The Fed will be raising rates again, or doing what maybe they won't raise rates ever again this time. But then eventually you go to recession, prices fall. That's how it goes.
Raoul Pal also laid out a potential roadmap for leading smart contract platform Ethereum. Pal tells Twitter that most traders are holding a low volume because they're looking for a cheaper entry zone. I still think the path of pain is higher as most participants are still underweight and are looking for lower entry points. Most people expect a failure in this zone of resistance. The former Goldman Sachs executive predicts the bigger battle will happen when ETH hits 2300 and the trend channel. Usually correction channels like this don't break on the first attempt and correct sharply into the range first. But that is something for a few weeks' time possibly.
I think there is obviously the market could go down to new lows, the market could trade sideways, the market could grind higher, or the market could V-shape. For me, the highest probability is the V-shape. And I know that sounds like hopium, but I'm doing it by looking at every participant and their pain points. Now, could be wrong, but only one of those is a new low. So why do I care? Secondly, we're at everybody's got their own favorite analysis for this, whether you're using the weekly RSI or whether you're using the 60-month exponential moving average or whether you're using the logarithmic channel. Right, we're record oversold. We're right at the levels. Whether we go down 50% from here or we don't, the upside is 10 to 20x on the entire market cap. This is like the best opportunity you're ever going to be given. And people are thinking over the price, was it going to go to a new low? I'm like, you're crazy, guys. This is the opportunity. This is the opportunity you're all waiting for, but you can't see it because you're all tick-watching charts and listening to each other get bearish on Twitter. It's like, zoom out, find me a better risk reward. Sure, you might be able to nail and get it down to exactly the tick, But for those people who are longer-term players, Here's the risk reward just laid on the table for you, and people don't want to take it until they're forced to take it because the price is going up. Because everybody was sitting there going, well, Bitcoin's going down to 15,000. Bitcoin's going down to 10,000. ETH's definitely going down to 500. It's like, really? You're all sitting and waiting for it. You're all underweight. Who's the seller?
So, do you agree with Raoul Pal that inflation might turn negative in the coming months? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video, and thanks so much for watching.